CrossWallet has rocketed. When I first covered it with you, it was 0.0135 and it went to over 30 cents. But today, I want to make sure you have a bit of foresight, a bit of vision to see the next rocket, to take action before the rocket takes off. We do not want to be chasing because of FOMO, fear of missing out. We want to be on the train and enjoy the journey and take profits at the right stage. Remember, we only do probabilities, never certainties. Do your own research. Taking a loss is a part of the game. And if you're not comfortable with that, you want to consider, should you be playing this game? So we're going to cover a real low cap gem still that's looking likely to take off. I've covered it with you before, but it hasn't really taken off yet. We're also going to cover some exit strategies towards the end of the video because I want to make sure you're understanding how to become risk-free. You've heard me read that Warren Buffett quote. Rule number 1, never lose money. Rule number 2, never forget rule number 1. But we want to put that into a practical step-by-step plan. I also want to make sure you understand staking. Staking, why these companies, these tokens, want your tokens locked up, but they're going to reward you so you can, again, mitigate risk and maximize gains. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. I used to focus just on Forex, like currencies, but now it's exclusive on cryptocurrencies. So let's dive straight in. So we did a video on CrossWallet not that long ago. When was it? It was the 18th of October, and the title was CrossWallet is still set to do a 100x. Is now the right time to buy, or should you wait, right? And if you don't know me by now, I do a lot of Elliot wave and Fibonacci, which allows me to read the psychology of the market, what's likely, highly probable to occur next based on human psychology, buying and selling behavior, fear and greed, pessimism and optimism. And if you haven't already, take my free Elliot wave and Fibonacci masterclass that lets you read the markets like a pro. And I've put in the hours and hours and hours, maybe even 100 hours, well over 100 hours to simplify what is normally complex. But what we said, if I just pull up the, I've got a laser over here so you can see what I'm going on about. This here on the 18th, I said, look, with CrossWallet, we should expect a pullback. I'm calling it a wave 5, a pullback, and then expect it to really take off. Expect it to really take off. And then what happened with CrossWallet? This part here, focus on the bottom left. This part here, I'm going to pull up a live chart. This is CrossWallet, right? This is CrossWallet. I've zoomed in because I want to make sure this is clear to you because sometimes it's just not clear. This is that first part I was talking about, this wave 1, and then I'm talking about a wave 2. And I said, expect it to then take off. This is what I'm referring to as get on the train, ideally down here, but then you get a second bite of the cherry at a wave 2 low. These are all good entry points, all down here and all down here, because it looks like the train left the station, but when it's still very low market cap, this is all very good, very healthy to enter into these positions. So when we look here, we're talking about down here, right? Before it takes off. So now let's just look at what happened. If I just zoom in like this, and I'm just going to pull the chart to the left, and you'll see then it started to take off. Right? Now, you do not want to be chasing. This is FOMO. Let the market do what it's going to do. You want to be getting here, down here, and ride the wave. Ride the wave. You don't want to buy the top of the wave. Right? Be careful. Right? And then the market went up, and it went up aggressively. Like it went up super aggressively. Like, check this out. These are typical wave 3 zones. And then it just, so total panic buying. Boom. Just like this beautiful wave 3. So now what we've got with CrossWallet, I'm showing you this because we did this in advance. Look back at the video. This was on the 18th of October. Talking about CrossWallet, you can look at the chart, look at the video, what we said. Let me just remind you this as well. I've got this up here for you. I just want a quick reminder. This is just the foundation of Elliot waves, right? I cover this in my courses and stuff. I do more detail in the free masterclass. And by the way, if you buy one of my courses, which I offer you at the end, a massive discount at the moment, you get invited to my private Telegram, so you get premier access to this type of content. So what I just say is the market typically moves 50% of the time in this 5-wave impulse and then followed by an ABC correction. It was just figured out back in the mid-1800s, 1900s, and early 1900s, and now people just figured this out. And there's waves within the waves. And what this allows us to do is read the market. Read what is the buying and selling behavior. Is the market as a whole likely to start taking profits? Or should we expect another bullish part of the movement? So that's what we're always looking at. So we're not just kind of guessing. We're looking at fundamentals, looking at technicals, so we're getting higher probability. So with CrossWallet, just a quick update on this because it's really relevant to the next part. It looks like, we covered the first video down here, people. And people thought this was a big move. I told you perspective. I said, look, it's likely to happen. It's a powerhouse project. And version 1 is not even live yet. They're still in alpha testing. But any day or week now, I think the product's going to go live and CrossWallet's just going to go to a next level because the rewards are going to be insane. So what we're looking at here, it looks like a nice wave 1, wave 2, wave 3. We should expect some type of wave 4. By the way, this is an overextended wave 3. Overextended wave 3. And I've heard, in the YouTube comments, in my private Telegram community, why is the price going down? By the way, I'm using closing day data. If you use candles, you'll see that the price went much higher. But this is just noise, right? Noise doesn't give us valuable information. So even though it went to what was it? 32 cents or whatever it was, or even higher. What was it? Jesus Christ, look at it. Jeez. That's where you go total panic buying. Look at that. Oh my Lord. Where did it go to? It went to nearly 40 cents. 40 cents. But this is all noise, right? So we don't really want to take that into account. It's better to take closing data, less noise, and it's just much cleaner. You can see that, right? And then people ask, why is the price going down? Because it went to 40 cents. I go, kind of ignore the 40 cents. That was just like a quick panic buying, and 24 cents was the closing high, right? And then we expect a wave 4, a healthy wave 4. Got some time and price targets, wave 4. So CrossWallet still got a lot of movement within it, because wave 5 product will probably go live. It normally associates, links in with some fundamentals, and then it'll probably do something like this. But again, we'll look at that. But why I'm showing you this is there's a project that hasn't taken off yet. Hasn't. Well, it looks like it has because people are looking at this part of the market and it looks something like this or something like this. Right? It looks like it's taken off. And I go, you have to have a bit of vision and go, it's likely to do something more like this, right? So what I've got next for you is CrossSwap, right? They're integrated. Yeah, we know it's incubated by the Bluezilla team. It's a DEX aggregator. It's going to be multi-cross-chain or cross-chain. But what they're doing is they're releasing articles, and they started to release articles more regularly again. 14 hours ago, as of today is the 12th of November, 9 a.m. UK time, which is also UTC time because the clocks in the UK went back. And it just kind of covers, these are just the medium articles. It's good to read them because people don't understand that they're not just the DEX. They're solving a problem for new projects launching and for investors. That's their main niche, but they've got a massive ecosystem, right? So CrossSwap, it's a powerhouse, fundamentally strong project, and it's due to go live with version 1, which is going to drive all its projects rather than PancakeSwap. It's going to drive it to CrossSwap. That's due to go live this quarter. So any day, any week, I'm expecting announcements. And remember, when WagyuSwap was announced, I got WagyuSwap open here. WagyuSwap was announced. I did a video. I said WagyuSwap is currently in like a wave 4. But when it was announced, is this Wagyu? Yeah, this is Wagyu. When it was announced, it was roughly around down here, right? So if I just look at this chart, if I just move it back to, I'm trying to show you this because it happens time and time again. When the market looks like this, let's say it looks like this, and you can't really get perspective on what is going on. But when the project hasn't launched, this was under 5 million, 3 million market cap down here. I even said we should expect this down to around, around under 30 cents. So it was around 22 cents it went down to, give or take. Here is undervalued, but then they started announcing the dates, version 1 of their DEX for the Valis blockchain, first DEX for the Valis blockchain. Then they announced the crazy APYs to incentivize people to use Wagyu to get, the farming, the pools. And then what happened? Well, then it just exploded, right? It just exploded, similar to Cross Wallet. It just exploded. Like it went all the way from, it's like a 10, 20x, right? What was it? It went from like 22 cents up to closing day, it was like 10, 15, 20. That's like a 1,500%, over 1,000% in the space of, when was the date? 14th of October to November. 2 weeks, 3 weeks, like a 10, 15, 20x. That's insane. Right? And now it's gone through a correction. I want to use WagyuSwap because of staking. People don't get staking. and I want to make sure you're getting it. So what are we anticipating with CrossSwap? Right, so we've got CrossWallet and we've got CrossSwap. Totally different projects, but they are integrating. So the CrossSwap is going to be the back end of CrossSwap is going to be back end of CrossWallet in terms of the main DEX. So we've got this amazing move to the upside. You know, when I first covered this, it was down here. I said, look, we've got a wave too low, but we've had the break of this high over here, this break. So what I'm anticipating next, we want to just get a bit of perspective, because we're due a wave 3, which normally in all financial markets is the biggest, strongest, most impulsive wave. Again, we're using Elliot wave, this wave 3, this one here. That's what we're using as a reference. There's method behind the madness, right? So what are we anticipating? Well, I've drawn this before. Look at this. I said we are anticipating a wave 3, right? So once it goes live, we should anticipate something similar to Wagyu, right? Something similar to CrossWallet, right? So we've got references, right? But remember, we want to get on the rocket before it takes off, before down here. Once it's up here, be careful that you're not buying here, because people will take wave 4 is a profit-taking wave. Natural human psychology. If someone's bought down here and the 10x up and they put in 10 grand or 100 grand or 1 grand, whatever's significant to the individual, their own portfolio, they should be taking profits. And we want to talk about profit taking today as well, because I'm listening to a lot of people. Some people are getting it. I don't think everyone's getting it. So I'm just want to cover it. So yeah, CrossSwap, I think it's going to take off. It's already done well, you know, especially if you manage to get in. A lot of you got in around 20 cents. What was the price down here? Yeah, down here was 20 cents. So I covered it at around 13 and a half, 15 cents, give or take. And then it drove up, and then it drove up. And then people thought it was over. I go, guys, this is $1 billion market cap project. Potential, high probability, never certainties. High probability, $1 billion market cap. Look at other DEXs, look at the ecosystem, look at the Bluezilla team. You know, they've recently launched WagyuSwap, and that's been a massive success. It went from, you know, 3 million market cap on the open market to like nearly 100 million market cap, you know, in the space of a few days or a few weeks, right? So just anticipate this, get ready for this, is what I'm saying. Doesn't mean it's going to happen, just highly probable. But what I want to finish today on with profit taking. So we've covered this. Before I cover profit taking, staking, right? Companies, let's just use, I want to use Wagyu as the reference, right? So Wagyu, right? They need liquidity, right? Liquidity pools was a massive innovation. Bancor innovated it. Uniswap perfected it. It's just brilliant, right? It means you can have fast DEXs. So what Wagyu has, it has farms where you can have 2 tokens. You call it LP token. You pair, like for instance, let's just use this one here, VLX, which is the Valas native token, and USDC, which is a stable coin. You pair them, and they say by pairing them and staking them here, you get 683% APR, which means no compounding. But if you compounded it once a day, let's just keep math simple, you get 74%. This works out to be 74% in 1 month. 74% in 1 month. Extra tokens if you compound it once a day. What does compounding once a day mean? Meaning you take the tokens, your rewards, and you stake them back in. But you might be thinking, if you're a bit more advanced and used to this, well, yeah, that means I have to buy more LP tokens. No. What Wagyu has is they have pools, which are single staking. Meaning once you get rewarded in Wagyu, you can actually stake the Wagyu into a Wagyu farm, but a single staking account. And then at the moment, the compounded APY is 8,000%, and the APR is 4,400%. Sorry, 445%. What does that mean in English? Excuse me if the math is, you know, a bit out there, as in I'm talking about numbers fast and sometimes it's not clear. I get that. But just to get the gist. If you're patiently waiting for your exit targets for the bull run, why not get more tokens? So let's just use $100 because it's a round number, it's easy to calculate. And you staked for 30 days and you compounded once a day. $43 from $100 is an extra 43%. You getting it? Hopefully that's making sense. So you can do that. Why I'm bringing this up when it comes to CrossSwap, most people are not getting this. CrossSwap is going to have very lucrative rewards. But whilst we're waiting for version 1 of the DEX, they have a 5% sales tax, and they share that sales tax with stakers. And you'll notice that their staking APY changes every day. It's based on how much buying and selling is happening, mainly selling of CrossSwap. And the fees are then shared for the stakers. They're rewarding holders and penalizing people that are selling. That's just the tokenomics. But on average, it's around 300% APY, right? It's been as low as 54. It's been as high as 670 over the last 4 weeks. But on average, I'm finding it's around 300% APY. That means you're going to earn a lot of extra CrossSwap tokens, which can add to your position size, which decreases your risk and maximizes your upside. Yeah, hopefully that's making sense. So I want to finish on one last thing today. I'm just going to get up a PowerPoint. It's more just so I can write some notes. I could use a Word document as well, but let's just use this. Right, because I want to keep it nice and simple. Nice and simple. Just something I don't think people are getting it. All right, I'm going to keep it nice and simple. Let's just say you bought 1,000. This is all about exit. If you've got your exit figured out, you can move on. Get on with your day. But what I want to just say is this: look, let's just say you invested 10K, right, in a project. Just forget what project it is, 10K, and you're new to the game. You're quite nervous. You're not quite comfortable with dexes. Yeah, and you can't sleep well at night. You're thinking about the project. You're thinking about sugar. Is it going to tank? Is it going to be all over tomorrow? And you're that level. And then you got a medium level, which is you've done this, you've made some profits, you're kind of getting used to the whole space. And then you're a pro, been doing it for over a year or 6 months. You've gone through 10, 20, 50 projects where you've got profit, you've locked it in, you're staking, you're yield farming, and so on and so forth. There's different levels. When you're on the newer side, you want to ideally become, and let's type this in, risk-free. Sorry, hold on. Sometimes this mic gets in my way when I'm typing. It's all about risk-free. Because some people have heard is like they say, Jagir, great, I get it, but I'm just going to hold my whole position. I go, it doesn't matter how much you believe in the project, whether it's Bitcoin, Ethereum, Uniswap, Cardano, whether it's the Bluezilla launch pads, whether it's WagyuSwap, whether it's Dogecoin, meme coins and whatnot. It doesn't matter. It's healthy to become risk-free, but it's for you to decide what's right for you. For beginners, 2x or 3x is good, right? Let's just kind of cover it like this. And I'm doing it like this just so it's clear, because I'm listening to people and I'm like, man, people are not getting it. So let's just say this is beginner level, right? And it's good. Everything is difficult before it's easy. Beginner level, right? A bit more advanced, or just let's call it, intermediate, 4x, or even 3x. 3x is healthy. Depends on how much you're playing with, you see. Because if someone's got 100 grand to play with and they're putting in 10, 20 grand per position, I go, okay, you want to be thinking about 3 to 5x risk-free, right? Because anything can happen, right? As soon as you think you figured out the market, you've already lost. Let's just say, we don't even need to call it a beginner level. It's not even beginner level. It's just whatever you're comfortable with, what suits your personality. Some people are more risk adverse and some people are more comfortable with risk. So every single one of these is the correct answer. 2x, 3x, 4x, 5x, whatever your answer is. But the math is this. Let's just choose 5x, right? Let's just say you got the hang of it. You're getting in really young projects. Like let's just say for CrossWallet, for instance, you got in at 2.8 million market cap, right? And you're very confident because CrossWallet is 400 million market cap. You understand what Bluezilla are doing. You understand the project. You look at the technicals and you go, it's got a very high probability of doing a 10x, 20x, 50x, maybe even 100x. But even though you know it's got a potential of 100x, you go, but I want to be risk-free. Sleep well at night at 5x. Yeah, hopefully that makes sense. So what that means is your 10K that you've invested turns into 50K, right? As in it's gross 5 times, right? Excuse me for doing it this way. Just sometimes I know some people are better at math than others, and it's okay not to be great at math. Some of the richest people on the planet are not great at math, right? 10,000, 5x is times 5 equals 50,000. Yeah? Make sense? So you got 50,000. But now we want to exit a minimum of 1 over the exit multiple. In this case, it's 5. If it was a 3x, it would be 1 over 3, which is a third, right? Hopefully that makes sense, right? So in percentage terms, that just equals 20%. So what that means is you now sell $10K, $10,000 worth of tokens. Yeah, that's your original amount. Bang. So this, what used to be risk, now changes to risk-free. Yeah, let's just make it nice green. Boom. Yeah, changes to risk-free. Why? Because your original 10K is back in your pocket. What can you now do with that $10,000? You can look for your next position. Now, during the bull market, you can go, right, now I'm risk-free. I can now let's just say it was CrossWallet or CrossSwap. Let's say it was CrossSwap. I can now just let that ride. Let it ride. Yeah, my next target is more aggressive. Let's say it was a 20x. It's going to move up. It's going to move down. You set a price alert in CoinGecko. That's it. And then you focus on your next one. You find your next low cap gem and you put in your full allocation. Let's say it was 10K again. And then you do the same again. You literally just set a price alert. Let's just say you're a 5x individual. That's your risk-free target. You know, if you bought in at $1, 5x is $5. If you bought in at 1 cent, 5x is 5 cents. Yeah, hopefully that's making sense. So then what do you do with the remaining amount, right? Well, you got 40K in this position remaining. Then you have exit 2 and exit 3. Have a minimum of 3 exits. And keeping it simple, you can just say 20x and 50x. Or you could say 10x and 20x. You go, but Jagir, which one's right? I go, there is no right. There's only a decision to be made. The main thing is that you're planning it ahead of time and you're setting a price alert. So when the price alert triggers, and let's just say it was, let's just jump into let's actually, shall I do this? Oh, screw it, I'm gonna do this. I'm gonna do this. Because sometimes I assume I'm making sense. And then it's only when I hear the questions, I go, geez, that didn't make sense. Okay, so let's just do this practical steps. So this is kind of turning into a bit of a workshop. By the way, we do workshops as well with my private Telegram community. We kind of just do it when I think they're needed. At the moment, it tends to be on Saturdays. So let's just look at this, right? So today's price is, let's just call it 60 cents, right? Let's just call it 60 cents. So I'm going to do it like this because I don't think people get it. And then I just hear the comments and I'm like, dude, did you not get risk-free like 5 weeks ago or 3 weeks ago? Do that or do this. You know, you females need to be recognized also. So let's just say it was 5x, right? So we go 60 cents is the entry price. Times 5 is $3, right? It's $3. So let's go to, I'm going to do this. Let's do this. What's the best way of me doing this? I'll show you. I've done CoinGecko another time. I was going to do CoinGecko, but I'm just thinking it might be a bit too. I'll just tell you the high level, right? You go $3. You then go into CoinGecko. You hopefully should have updated your position, and then there's a bell notification or alert signal where you say, CoinGecko, please tell me when CrossSwap hits $3. If it hits $3, we do probabilities, never certainties. And then let's just say it does well. Let's just say, I don't know, let's just say the DEX goes live and it announces rewards like WagyuSwap. It goes the first APY for the first, I don't know, how many ever blocks or however they run it is like similar to WagyuSwap, 94,000%. And there's a stampede of people buying CrossSwap saying, hey, I want those rewards. They say transaction fees, you know, these percentages are going to go out. These next 20 IDOs are going to be listed on CrossSwap and so on and so forth. Let's just say all that news happens. And then CrossSwap just does this. Let's just say it just smashes the targets and it just gets to $3. It just goes boom, $3, right? And let's just say, because we are aware of PancakeSwap and Uniswap and everything else, what we believe is going to happen is, let's just say we believe, because I've done videos on this, you can see these arrows before. Let's just say we believe $30. Now, just because we believe $30 doesn't mean we shouldn't take profits on the journey to $30, right? Because $30 is not guaranteed, right? So $3 is the first target, even though we believe it's got a high probability of getting to $30 by the end of the bull run. So what we do is this. We go, okay, we invested 10 grand. It's done a 5x. Great. We sell $10,000 worth of tokens. Bam, we still got 40,000 in the position. Then we might say, all right, Jagir is going to go, our next target is $15. $15, which is a 5x from $3. Right? Hopefully that makes sense. Hopefully it makes sense. Because if it's at $3 to get to $15, 3 times 5 is 15. Right? So it's another 5x. What does that mean? Well, you're at $3, your position size with this example is worth $40,000. Times another 5x is $200,000. And you want to write this ahead of time. Let's just say we sell half. Exit 2 is sell half. It could be whatever you want it to be, but in this example, we're saying half. Well, what is half? Well, we divide it by 2. We sell 100 grand. So we're risk-free. Now our second exit is 100 grand profit in your pocket. But you still got 100 grand in the position. And let's just say your exit 3 is $30. $30, right? And currently we're at $15. Well, $15 to $30 is what? 2x. Yeah, hopefully that makes sense. 2x. And if it does that 2x, that means this current remaining position does a 2x and you sell. So what does that mean in total? It means you invested 10 grand. Yeah. And then you exited 10 grand, right? So you're risk free. Then you exit 2. So now the worst that can happen is you make a small amount of profit. Unless the token, I don't know, fails, which is also a possibility, unlikely, but a possibility. All right, you break even. Yeah, makes sense? So rule number 1, Warren Buffett says never lose money. Well, you've just guaranteed on this position that you cannot, it's impossible to lose money. Why? Because you're risk-free. Yeah, hopefully that's sitting with you. Hopefully that's sitting with you. Second exit, we exit 100 grand. That's pure profit. Third exit, if it successfully hits $30 in this example, was a further 200 grand. Total profit, 300. Gross, you have to include the 10, 310. Divided by your original investment of 10. Gross, that's a 31x. Is that making sense? Hopefully that's making sense. You know, because a lot of people talk about buying low and so on and so forth and loading your bags. But if you don't take your profits, most people were in the 2017 bull run and going into 2018, held on to all their profits and gave it back to the market. I believe in whatever project I'm going to hold. I'm like, come on, man, live your life. Like, you have to kind of treat this like a business because it's a business. No emotions here. But the last thing that I want to cover with you is staking, right? So let's just say your first exit, let's just say token price is 60 cents. 60 cents, and you buy $10,000 worth of tokens, divide by 0.6, this is how you do the math, you'll have this many tokens, right? Exit 1 is going to be 20%, right, for a 5x. Why I'm showing you this is the amount of tokens you need liquid. You need these liquid. So if your target gets hit, you can sell ideally within the same day, ideally within the same hour, ideally within the same 5 minutes. Hit your target, price alert, bang, risk-free. No more thinking. It's mechanical, it's objective, it's business. Then your remaining position, whilst you're waiting for your exit 1, should be staked. You just go, right, CrossSwap, in this particular example, if there's a staking availability, with CrossWallet it's 25%, with CrossSwap it's averaging around 300% APY. These are good rewards, but you might as well let your tokens work hard for you so you're just increasing. Notice though, with this particular one, there's a 7-day unlock period, right? So if you want to unlock, there's 7 days. What I've also noticed is when you unstake, you don't receive any rewards, even if you've got some rewards left over in your staked account. So what you can do is just create 2 separate wallets, stake wallet 1 and wallet 2, and it's a third and a third or half and a half of your remaining positions. And it means when you're withdrawing that one's still earning rewards over those 7 days and beyond. Yeah, so there's a few ways of getting around this. But the main lesson here, hopefully I'm making sense. Let's wrap up as well, because I know I've been It's longer than usual, but it turned into a bit of a classroom session. You know, I used to be a math teacher, qualified to teach up to A-level. My degree is sports science and mathematics. I'm an entrepreneur, but I love coaching. But sometimes people just don't get it. Exit 1 is so fundamentally important. If you're not having an exit 1, exit with a 3x, 4x, 5x, even if it's a 10x or a 20x, if it's an IDO, then it can be something like a 100x or a 50x or a 200x, because IDOs are different. You're getting in much younger. Like Postpad, it did like a 900x. Jeez, on Uniswap, on the Ethereum blockchain, on the Binance Smart Chain, it only did like a 400x or 390x or whatever it was. But those are a bit more aggressive. But when you're buying on the open market at 3 million market cap and not $100,000 market cap, then 5x, 10x, 20x, just have an exit 1. If you do not have an exit 1, man, the probability of succeeding is going to be low, because you're not going to know when to sell. It's going to be too emotional, because you're going to be always thinking, what if it just goes higher? Don't want to sell too soon. Whereas if you can just get with the plan and say 5x, exit, but knowing that when you exit that 5x, that initial 20%, it's going to go into the next rocket, which also has 100x potential. Yeah, so now you're just doubling the chances of you winning. And guess what? If and when that does a 5x and you exit 20%, what are you going to look for? The next one. So during the bull run, you're just loading these real high probabilities up, and some will not succeed. Some will not hit the 10x, 20x, 50x. Most should hit your exit 1, right? You want to get into that position. Some won't, but that's okay. That's why you're not putting everything into one basket. Hopefully that makes sense, man. Hopefully, because I'm listening to the comments. I'm listening to my private Telegram group. You know, if you bought my course, you'll be invited to the private Telegram group. But you have to kind of do the homework and do the work. Do the work, do the work, do the work. So if you like today's video, like, subscribe, hit the bell notification. Take my free Elliot and Fibonacci masterclass is in the link below, and you'll get an opportunity to buy one of my courses. We do workshops as well. We're doing them on Saturdays at the moment, just to kind of get some of this stuff across. Let's finish on a quote. It's a relevant one, very, very important, because you cannot win all the positions. I always say, you know what I say now, right? It's probabilities, never certainties. And I think one of you on the YouTube comments wrote, yeah, I know you do probabilities and never certainties, but the probability of what we're picking, we've got a good hit rate. 6, 7, 8, 9 out of 10. 6, 7, 8, 9 out of 10 is way above average, but we do not want to get complacent. We always want to know, just because 6, 7, 8 of the last 10 have just been like really spot on, it doesn't mean that we should break our business plan and risk more than our business plan is stated. Where it's 5%, 10%, 20% of your account, because we're combining retail venture capital alongside technicals. So it's fundamentals and technicals, and we're combining them, right? So we always want to get the probability. All right, here we go. Let's wrap it up. You must be in it to win it is the name of the chapter. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Why I'm choosing that one today is because some people expect to win every single position. I go, you're crazy. The best investors on the planet, especially when it comes to just pure technical trading, are only right around 40% of the time, right? So we need to manage your expectations. So if VCs, venture capital firms, they only expect to have 1 or 2 out of 10 to be a unicorn, which reaches $1 billion market cap. 4 or 5 to be average, good gains, and then 4 or 5 to just tank, like not even survive. But they don't know which one. So that's why we need to be aware that we do not know which one. We do not know if CrossWallet is going to perform better than CrossSwap, or CrossSwap is going to perform better than CrossWallet. We anticipate both are going to perform well. With the launch pads, we don't know which one's going to be the best launch pad at the time of buying. So that's why you have to make a logical decision, look at the probabilities, and then live your life and go, right, let's move on, but just make it objective, mechanical, and so on and so forth. Right, today was like a little mini masterclass in itself. So if you liked today's video, like, subscribe, hit the bell notification, and I'll see you soon.